Welcome to the Daily Update, where I'll go over the action in the market for Wednesday, June 26th, and then we'll see how things look for Thursday, June 27th. It's kind of an interesting market right now. We have a few up days with the S&P, and internally, things start to look weak again. Last Friday and Monday, we had down days, and things appeared to be improving. We're going back and forth between this idea when the mega caps have a good day, the rest of the market starts to show some weakness. When mega caps see some profit taking, that's when we see some strength coming in. We're still positive for right now, but the market is really tenuous at this point. A solid down day could really shift things over negative. Of course, a solid up day could end up taking us higher. We do have a real long list of economic reports coming out on Thursday, but the most influential one will be on Friday with the core PCE. Before I start, for the month of June, the SPXInvesting Program has now launched and it's free for the month of June. I will be locking it down in July. If you want to learn more about the program, some links are in the description, as well as a link to take you to the website. And here's an email address for any back and forth you may want to have concerning that. So let's go back and talk about what happened and then look through the charts. Right at the open, we had a lower open. Europe was a bit weak, and I think that carried over because the futures were just going down, 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 down right after Europe opened, and then we saw the decline, which led to the lower open in New York. But prices quickly found support at S1 at 54.53, and then we chopped back above the daily pivot at 54.63, only to fall back again and retest S1 once more, and that was successful, and that helped set up some things to be a little more positive later. Prices climbed back above the daily pivot and the unchanged level. That's when we finally went positive, but then we fell back below the unchanged level, and then we saw some buying coming in late in the day, and we closed just below R1 at 54.78. So it was the high for the day. Not an awful lot of movement. We're still seeing volume above average. In fact, we were up 0.16% on above average volume. So things are hanging in there. You could take that from the positive way. Things are looking tired. That could also maybe be looking a little more positive right now. We're not seeing a lot of selling, but on the negative side, we're seeing these negative divergences, the strength that had been coming back in. Now that's actually starting to turn and go the other way. And the market is looking a bit vulnerable right now. So that is where you could take things over more to the negative side. But for right now, though, all we can go with is what we see right now. We're still positive in the short, intermediate, and long term. And as we play out the last couple of trading days of the week and of the month of June and of the quarter, there might be some window dressing that comes in. So there may be some support from that, from the big money managers and hedge funds and ETFs and mutual funds and all that kind of stuff. So we do have a couple of positive days going into the latter part of June and then even into the early part of July. And I'll go through that later. Some comments, the mega caps outperformed. And when they're doing well, the rest of the market is not necessarily doing that. Those negative divergences, they're still there. Now they're getting a little bit more pronounced where they had been showing some improvement. The strength is still going away after it had been building. We're a little bit overextended in the short term with the Williams percent R, the stochastics, and the short-term RSI based on 9 periods. Even intermediate terms. So we didn't really get a chance to work off that extreme positive reading with the RSI 14. We came down a little bit, and now we're right back up there. Now, that could be also taken as positive because it's just showing good momentum. Anytime we have an RSI that's sustained above 50, that tends to be a good sign and showing good momentum there. The Fed scenario hasn't changed as of right now. They're keeping rates higher for longer because inflation. And I've been hearing some things here and there where the target rate was 2%, and some people were saying, well, maybe it's going to be 3% now. Well, we don't know how that's all going to play out, but it's not coming down the way the Fed wanted. Maybe we'll get some more confirmation of that in the report that comes out on Friday. and they're looking at possibly one rate cut. And if that does happen, the market thinks anyway that it will come in September. The dollar was up and interest rates were up. This also pressured stocks. We closed at 4.32% for the 10-year yield, where we had been at 4.24%. So a pretty big jump in the 10-year yield. We're still inverted with the yield curve, and we did go up a little bit. We're still negative as far as sentiment, but we had been at 39, where we came in at 41. We are in a trending environment, believe it or not, even though the price chart just shows us kind of waffling sideways. But we're above 20 and we're above the moving average, and we are positive. But the green line keeps coming down on the ADX. With the up day, our bias is positive, and I'm still keeping our momentum at mixed. We're not really seeing any real conviction right now. So the reports that did come out, we had the weekly MBA mortgage applications index. It was up 0.8%. Last time it was up 0.9%. I don't know if we got the report last week because the market was closed that day. New home sales were a lot weaker than expected. Came in at 619,000. They expected 650,000. Last time it was at 698,000. So we're seeing a little bit of weakness here in the new home sales. And here's a chart just showing how the applications were positive. In the last couple of weeks, it's been pretty slow after we saw a really nice up move here as far as people making applications. And then here's the new home sales. This is the seasonally adjusted annual rate, where it is coming down, but we're still above this, at least on this adjusted basis, we're still above that 600 level. And then the 3-month average of the home prices, it's continuing to go up, but we're still slightly below zero overall. Here's some blog charts that I found. This is the sentiment versus the VIX, as well as the S&P. And we show these things too in this video, but this is charted a little bit different and gives you a little bit longer term. Just showing that we're looking pretty solid right here. When we take the VIX and the sentiment together, you could make a case that maybe this is a negative divergence where we're still going up, but we've been going down as far as sentiment is concerned. But then also historically, you can go back and look at different events that have happened and what sentiment was like at that time, either positive or negative. It's been 337 days, excuse me, since we've seen at least a 2% daily drop in the S&P 500, not necessarily setting a record, but still kind of a long time. And this could suggest the solid momentum that we've been seeing. And then looking at the S&P 500 here, that's typically weak. It typically peaks. Sorry, had to move this bar above here that blocks the words. When quality and momentum are outperforming, okay, against history, when value is actually elevated, the takeaway here is that we are going up, but we haven't crossed above this black line yet. So we're not really seeing any kind of an extreme reading currently. And then here is a longer term look at the S&P 500. And then there's a thing called the E-minis. And some of you are very familiar with those. They used to have just regular S&P 500 futures contracts. And that's what I follow for the most part. And then to try to build up a more popular market, which is very popular, there are E-mini futures contracts. They're a lot smaller, but they're still highly leveraged, and they can be great when things go your way. You can lose money very quickly when it goes against you. And this is just trying to take a look at how the S&P has been going up here, and then what are the E-minis and the asset managers, and then their total futures here. And they are still anticipating things going up from here. And then we get different charts like this all the time. We had the big 10 companies, then the Magnificent 7, and then the Great 8. Well, here's 5, the Fantastic 5, I guess. It's 28% of the total S&P 500 market cap. And then we look at the stock correlation within the S&P. It has declined since 2022, around the time that ChatGPT came out, and is approaching 20-year lows, okay, that we saw in 2017. Okay, but years of low correlation into the early to mid 90s as the internet bubble developed suggests today's decorrelated regime could persist. So we could continue to fall down here. And they're taking that as possibly being positive. And then breadth is exceptionally weak, and we're comparing the S&P 500, and this is the equal weight, as well as the NASDAQ 100 equal weight, and how this is part of the negative divergences that we are seeing. And then the economic surprise index, it's still negative overall, but it has been ticking back up. We really haven't been getting much in the way of reports over the last few trading sessions that are surprising one way or the other. But that could change. We've got GDP coming out. We have the price, the reports coming out on Friday. And then risky versus safe asset fund flows, where folks are getting a little bit more defensive when we drop below this zero line. I did find a few interesting charts here on Twitter, small business optimism. It's just showing, and this is not a good thing because most people work for small businesses and it's a massive a part of the US economy. And so they're just showing that they're more pessimistic or less optimistic, depending on how you want to say that. And then the current bull market has spent 11% of the time being overbought. That would suggest good momentum. And when I say extreme positive or overbought, and we're showing our short and a lot of our intermediate term indicators as extreme, that's what we mean by overbought. Now, if you remember back to 2022, we were in a downtrend during that time. We were actually in a cyclical bear market. And anytime we would get overbought, when we would see a bounce, it usually didn't last very long. Well, that's because the bigger context was that we were in a downtrend. Now that we're in an uptrend, we can stay extreme positive, which I always say just suggests good momentum. And then this is kind of interesting from Sentiment Trader. Here's a tweet. It says the percentage of stocks in the S&P holding above their 200-day moving averages has consistently been above 70%. And I show a chart of that later on. For stocks in the NASDAQ, it's closer to 40. And this is a 30% spread between the two. And it generally coincided with a broad topping formation. See, we're not necessarily seeing a blow off top and then a decline after that. Now, that could still develop, but we haven't seen that to this point where we're getting at or near all-time highs with at least the NASDAQ 100 and the S&P. The Dow's not too far behind. The mid caps and small caps are lagging, but they're not screaming to the top and everybody's just partying. And then like we did back in 2000, where we really just kept going up and up and up and then shifted rather quickly. This could be possibly more of a rounded topping type formation if we're going to end up seeing something like that continue to develop. And then good old angelic voiced Janet Yellen. They say here, according to this article, that she's out of touch. When they questioned her about grocery store sticker shock, she says, oh, I'm not seeing it. Right? I can't sound like I'm not seeing it. So anyway, she doesn't get out very much, I guess. But yet she's the Treasury Secretary. All right, let's go look at our intraday chart where we had a lower open. We came down to S1, but we bounced up off of that, got above the daily pivot and really chopped around. Really no conviction right after the open. We came down to S1 again. So that would be a successful test. Of course, we don't know that at the time, but we have to look at it in a bit of hindsight where we bounced up. And this is where we tried to go positive, but we weren't able to stay above the unchanged level. And then we just chopped along sideways and then saw some buying going right into the close, which took us for the high for the day, right a little bit under R1. Then the intraday chart, I'm trying to see here. It doesn't really pick up what was happening in Europe per se. This is pretty much just the cash session here where we ended up seeing things a little bit higher and then declining after that. Now, this is still positive, though. We're still seeing the blue line above the red line. And so that part of the positive scenario still continues where growth is outperforming value. We're also up a little bit here after we had been seeing some weakness with S&P growth to value. And then our end of day chart, growth was up where value was down. Mid caps, it was down less. And with small caps, they were about even, but growth was up just a little bit more. So not really seeing much of an improvement here with small cap growth to value, or really much of an improvement with mid cap growth to value. A little bit of an improvement here, not necessarily falling apart, but not breaking out right now with S&P growth to value. This is looking better though. These ETFs, the growth versus value ETF is above the rainbow and continuing to advance. And we're still seeing discretionary chopping sideways, a little bit of weakness with the staples. And so that's why we saw a little bit of a tick up here with the ratio, but this is not showing any real strength currently. Large cap growth did see a bounce up, a little less than 0.5%, just coming off of a recent all-time high, still above all the moving averages. And we look at the ratio between large caps and small caps, also coming back and just about setting a new all-time high here. The Wilshire, a broad market measure, this is where we're seeing a lot of the sideways chop currently, but really near all-time highs. And our trend, yeah, we are in a trending environment. You wouldn't know about all the sideways action here, but we see the green line coming down, but the red line's also declining as well. But this is still suggesting we're in a positive trending environment. And we're seeing that same thing here with the short-term ADX, where it's looking a little bit stronger, but the green line going down is not very comforting. And we are still above average when we look at volume. Sentiment, we did go sideways after dropping a bit and then spiking back or coming back up a little bit with the Ulcer Index. We did get the latest reading from Investors Intelligence. They actually dropped a little bit to 3.42. The takeaway here is that we are above 3, but it could still go higher than where we're at now. We decline with the VIX on a closing basis when we look at the line chart, and we closed at the bottom here with the bar chart as we're seeing fear continuing to come out of the market overall. And with this slight update, we saw the VIX of the VIX decline back down to the moving averages, also with the bar chart, and closed right in between the two moving averages on the line chart. But the momentum of the VIX still continues to be up, even though the MACD is rolling over slightly. The SKU index, we're not up in this red area. We did drop, and the market's expecting some kind of a big move. Is 0.16% considered to be a big move? I don't know, but doesn't mean this we're going to get a lot of really powerful signals from this necessarily, but this chart usually indicates they're expecting something, but to right now, it really hasn't happened. Now, it still could. And these charts were not updated. I waited and waited with the equity put call ratios, so they're not looking very helpful right now. We're still showing where the volatility risk premium is high. We're well above this upper band. So we're seeing a low VIX, but we're seeing a really high VRP, kind of a contradiction currently. And this fear gauge went up, and this other fear gauge also declined. Just it's really hard to see, but it declined. So we're getting some contradiction there. And this is where we're starting to see these negative divergences coming back. We look at the advanced decline line based on price. We were up with the S&P, even though we've been going sideways, but we're trailing off here based on price. But on the positive side, when you look at volume, we continue to be positive. And we saw a contraction of the new highs and not really an expansion of the new lows. We're pretty much going sideways. We were trying to turn positive with the 5 period, but now rolling back down. We're flattening out with the 10 period. And we're kind of going a little more negative here again. Even with the up day, we dropped below 0 with the blue line and the red line, which you can't really see. They're both negative right now, both with the 19 and the 39 day. But the accumulation distribution is continuing to go up and above an advancing moving average. We're starting to go back up, but the moving average is still declining with the Chaikin money flow. We're turning back up with the Chaikin oscillator. And we're coming down just a little bit below the moving average with the cumulative advanced decline line on the NYSE. Decline, but still above the moving average with our regular NYSE advanced decline line. And this other advanced decline line still above the moving average. Just shows that we're hanging in there for now on the broad market. We decline with the common stock on the NYSE advanced decline line, and we're also declining based on volume, but not showing an awful lot of conviction. Came down a little bit with the cumulative price for the S&P on the advanced decline line, but still holding up better based on volume. So that there's a negative side, and then we came down. The positive side is that we're still holding up when we count this based on volume. And this is another negative divergence that we're seeing is the S&P, it's chopping sideways now, but the red line, which is the NYSE advanced decline line, is trailing off again after it had been improving. And we're seeing some problems here too. We're declining again with the NYSE common stock for the advanced decline line, coming down but still above the moving average with the S&P, declining with the mid caps and pretty much flat, but below the moving average with the small caps. So looking at our daily chart, just continuing to go sideways, wondering if we do see more downward moves, are these pivot points going to provide support? If we go up, are these other pivot points going to provide resistance? And we still are above average with volume. We're looking a little extreme positive with the Williams percent R. The stochastics are still extreme in the short term, declining, but still extreme in the intermediate short term, also declining, and extreme in the long short term. And we're looking at our 20-period double and triple exponential moving averages. We're still hanging around. We haven't really broken above, or we're looking a little bit below these lines right now, but the lines themselves continue to go up. And this is another thing that's causing a bit of a concern. We're declining with the 20, 50, and 200 period moving average studies just for the S&P. We're still positive with the force index. We're still above the 20 period moving averages. We're up in the upper end of the +2 channel with our standard deviations chart, so we're not extreme there. We're declining but positive with the balance of power, and we're actually this redrew here, where we had been solid dark blue. That's more positive. When it turns to the lighter shade of blue, that's more neutral right now, according to the go no go, and it redrew by changing the last 2 bars here. We're going sideways, but still above the midpoint with the highest high value. And we're still going up here with the TTM squeeze. It's showing a little bit of upward momentum. And our 50-period double and triple exponential moving averages still above the red line, and the red line's above the blue. So the intermediate term trend is still holding up. We're declining, but above zero with the ease of movement. This is part of the weakness that we're seeing coming in here. The Erin is not really telling us much. We are positive since we're above zero with the oscillator, but it's been going sideways. And this is a concern. We had turned positive with the S&P McClellan oscillator. We dropped below it after Tuesday. Now we're continuing to drop below it after Wednesday. So instead of turning and going up with the summation index, now we're starting to go down based on price. We've slowed down, but we're still declining based on volume. And just peeking its head above zero with the NYSE McClellan oscillator, that's now turning back negative again. So we're declining with the summation index for the NYSE based on price and volume. We're still positive here, but declining with the Swenlin trading oscillator based on price and volume. And our oscillators, we're still looking positive here. Now we're looking a little more positive based on price, even though we rolled over just a little bit. We have not really turned and started to go up based on volume with the PMO study here. So we're declining with the PMOs that are rising. We're pretty much leveling off with the buy signals and leveling off to declining with the PMOs above zero. And we continue to be neutral with the Elder's Impulse system for the S&P. We're positive with the parabolic SAR, positive with the slope oscillator. Since we're above the green line, you could make a suggestion that we are extreme positive. And you could also read into a negative divergence here, where we're coming up and setting a higher high with the S&P. We set a high here back in May, and we haven't been able to surpass that high yet, as we've been hitting recent all-time highs. The MACD looking a little stronger here. It's actually breaking out above this previous reading, but it's rolling over and in danger of dropping below its moving average. So we're seeing a little bit of improvement here with the slope sideways with the TSI. Those are our short-term oscillators. The MACD is looking a little weaker. The PMO is pretty much flat. A little bit of weakness with the PPO. Those are the intermediate term. We're still going up and showing early signs of possible rollover with the TRIX and KST, which are our long-term oscillators. We're above all the plotted moving averages here. We came down just a little bit with the bullish percent index. This had been a sign of hope where we were starting to go up ever so slightly. Well, now we came back down ever so slightly, but we're still positive since we're above 50. And we're declining with the NYSE bullish percent index. We're also declining with the NASDAQ 100 bullish percent index, but still positive. And we're ticking back up a little bit with the money flow, and we're still above 50. And we're declining with the ultimate oscillator, but still above 50. And this is another warning sign here. We had an update with the S&P, yet the green line, even though it's on top, continues to decline. And here's the RSI. We're just barely above 70 with the 14 and a little bit further above 70 with the RSI 9. And since we had the up day, we're above the advancing moving average with on-balance volume. And this is also another warning sign. We thought this was getting better with those stocks in the S&P 500 above their 20-period moving averages. That's now dropped below 50. And so our study here, which had been showing some improvement, is now not showing any improvement right now. And we're also dropping below 50 with those stocks in the S&P 500 above their 50-day moving average. Declining, but still above 50 when we look at the 100-period moving average study. Also declining, but above 50 with the 200-period moving average study. The copy curve rolling over, but still positive. Pring bottom fisher is still, for some reason, generating a signal. And the Sean trend meter did decline. It's no longer extreme positive. We're also dropping down. This is a broad market measure with the Amex, NASDAQ, and NYSE. We take a 5-period moving average of the highs minus the lows. We continue to drop further below zero. So that's negative. And our weekly chart of the S&P, we're still above this R2 level here. It's right at about the 54.51, okay? And we're at 54.77, almost 78. So we're still above this. So for right now, this level has held on a longer term basis. And here are some new charts that I just started to show. These are Fibonacci extensions where we had come all the way up to this 50% extension level, and then we've been coming back down and then chopping sideways ever since then. Later, I'll have one for the NASDAQ 100. We're just seeing really small candles here with the Heiken Ashi, where we're still positive with the Kegi, but pointing down. We're positive with the Renko, positive with the 3-line break. And we're still declining with our 150 and 200-period moving average studies, where we're no longer extreme positive with the 200. You can also suggest that as we've been going up with the S&P, we've been seeing this going down. That is a negative divergence. And the short term for the mid caps is negative, where the short term for the small caps and intermediate term continues to be negative. We're still just negative with bonds based on price in the long term. No changes with the decision point scorecard. Saw some red initially with the lower open, where the Dow went below 39,000. The NASDAQ got below 17.7, but then we had Canada, good old Canada. They had a bullish MACD crossover. Real estate, because of the housing information that's been coming out, it was seeing some strength, and now it's crossed below 80. But then the NASDAQ near the latter part of the day, right near the close, it was able to get back above 17.8. And we saw discretionary actually do the best, and that's encouraging, but it hasn't really helped our longer-term relationships between discretionary and staples. And communication was barely positive, with all of the other sectors being down. And we're still below zero when we take the NYSE new highs minus the new lows. And that's not positive. But the 50 period is positive, but it is declining when we look at the 50 period moving average. And we're seeing a bit more of a negative divergence here. We're going sideways with the S&P. We're starting to drop when we look at the equal weight. That's because the mega caps did well. So that's why we're seeing this ratio going back up. The Dow is still above this pivot point and above its 50-day moving average. It was slightly positive. And we're continuing to be neutral with the diamonds for the Elders Impulse system. And these are the pivot points that we're watching. This was the high for the NASDAQ. We were up a little under 0.5%, but we want to be able to break above these pivot levels to establish more of an uptrend. The NASDAQ 100 was also up 0.25%, but still below these pivot levels. And we continue to be neutral with the QQQs when looking at the Elders Impulse system. The momentum for the NASDAQ 100 is in danger of crossing below the moving average, but it hasn't crossed below it yet. And here is the fib extensions chart for the QQQs. We came up almost to this 38.2% retracement level, have been backing off. And yeah, we see green bars in here, but we're not really breaking out to the upside, at least yet. And that makes us also think, okay, are we going to hit this level and then see more of a sustained decline? And this weekly bar, and it was looking pretty scary, especially when we had the down day on Monday, or yeah, it was Monday, but it's showing some improvement here. It's just showing not a real conviction to this point. The small caps were unchanged on the day and still below their 50-day moving average. We're still neutral with the Elders Impulse system when looking at the small caps. Looking at the Russell 2000 small caps, we're still below 50 with the RSI, still below the 50-day moving average. The momentum continues to be negative. And the mid caps are still under their 50-day moving average and below these pivot points here. And we've actually remained negative with the mid caps when looking at the Elders Impulse system. We're still not far off of all-time highs with our total US stock ETF, but it's not showing an awful lot of conviction there. Apple was up 2%, but has not set an all-time high. We now are in an uptrend with Apple. Tesla was up 4.81%, trying to give a challenge back to its 200-day moving average, but still in a downtrend. NVIDIA was up 0.25% and still looking pretty solid after it had been seeing some profit taking. Microsoft setting in, I believe that's an all-time high here. It was up a little over 0.25% and in a solid uptrend. Not setting an all-time high as Meta, but it was up almost 0.5%. Amazon looks like they are setting a new all-time high, up 3.9%. And Google also probably, well, maybe setting an all-time high, or at least maybe it did yesterday, but still looking pretty solid. And Netflix was up 0.79% and still looking solid there. The FANG index, after seeing a trailing off here, has now come back 1.72%. And the financial sector, we're dropping a little bit below the 50-day moving average. And now we're coming back down just slightly with our staples to tech ratio. And that's what we want to see to stay more positive. The dollar continues to go up. We're getting up into the high 105 range now. And the short-term correlation between the S&P and world indexes is starting to improve, but we're still declining with our longer-term correlation. And when we look at the staples sector, still above the 50-day moving average, we're turning up just slightly with the relative strength as well as the momentum down here, but both are still above zero or below zero. And the utilities also showing the red line's going down, but the green line's going back up as we're coming back down to the 50-day moving average. Still declining here with healthcare and below 100. Energy has not been able to get back above its 50-day moving average after bouncing nicely off the 200-period moving average. And when we look at the momentum, we are crossing back above 100. We're improving here with the relative strength, but it's still negative. And we really shot up with the 10-year yield. Here, that's not very helpful to the market right now. So we came down with the 10-year based on price. And our growth to value ratio is a bit of an improvement, bouncing off the moving average when we look at the Qs to S&P, coming above the moving average with discretionary to the S&P, but the moving average is still declining. And we did see a nice little bounce when we compare large cap growth to large cap value. So the large caps are looking a little bit better, bouncing up slightly with the mid caps and just about right on the moving average with the small caps. See, mid caps, small caps. I hope I said that right. This is a little more negative. Our 19-day advanced decline ratio, we're below zero based on price, but on the positive side, we're still above zero based on volume. And we're starting to go back up with the S&P to utilities ratio. That could be more positive for the S&P. And we're back to declining again when we look at staples, the S&P 500, the ratio there. We want that to continue to decline to be more positive. So what's our outlook for Thursday? We are still positive, but these negative divergences are just not going away. And some of these strength things that were coming in, internal measures that we were seeing in the S&P, some broad market things that were starting to improve, it's just not following through. In fact, some of them are even starting to go away. We're going to get the advanced international trade as well as retail and wholesale inventories, not a real influential report. We'll get the weekly jobless claims, especially if they're really above or below expectations. Durable goods, that can be influential. And then we're going to get the third estimate of GDP, which does have an inflation component. This will probably not have a big impact on the market unless the number comes in very different from what we saw the last two times. And then we're going to get pending home sales. And we want to keep an eye on the geopolitical events here. And then on Friday, this is when we get personal income and spending and the core PCE. And there's kind of a long list here for Thursday and different things where a lot of this has to do with the PCE report coming out on Friday. We're also going to get the Chicago PMI, but that didn't seem to come up on the other calendar that I look at. Seasonality, we're neutral to positive with the Dow and the S&P on June 27th. We are in the week after options expiration where we tend to be down more than up. Thursday is one of the more positive days of the week, so we might get some help there. And we're coming back into the latter part of June. We still have 2 trading days left. And this is when we see some positive seasonality during an election year. And according to Carson, we're out of this yellow area now. We're just finally starting to come back to the other side. And little bigger picture look here, the kind of gold brown line does see a little bit of weakness at the latter part of June before we see a little bump up going into July. Tom Bowley, we have one more day of his weakness according to his research before we have a couple of days of positive seasonality. And then this is the July chart. Just to give you a look at this, I won't start really marking this until we get into that month. And then this is another Stock Traders Almanac chart where we typically can, from 1985 to 2023, see a little bit of a bump up at the latter part of June going into the first part of July. And then this is a new chart that was posted on Twitter from Stock Traders Almanac. What is that? Purple, pink, whatever crazy color that is. They're suggesting here that we've become very far away from the green line here, which is, yeah, we are far away. And so this means, are we due for a little mean reversion, which means it's kind of like the boom indicator that I have when we get too far away from the 20, 50, or 200-day moving averages. We boom and have a tendency to go back. Well, maybe that's what's being suggested here because we've gotten way ahead of ourselves according to historical seasonality. So the warning signs, we're still keeping an eye on staples, utilities, energy, and healthcare. The advanced decline line's just not really showing any strength now, and growth to value is improving, but not breaking out. Where discretionary to staples, those ratios are just not leading. And the S&P and NYSE McClellan oscillators and summation indexes are back to being negative for 2 days now. And the QQQ chart it was looking more scary, but now it's not looking as scary. And then the positive side, we still have the parabolic SAR, which is positive. Our 3 big smart money indicators continue to be positive. And I don't know about the equity put call ratio. That didn't update. But our oscillators are positive, but could be rolling over. We get a little bit more of a significant down day, and we could switch over negative there. Of course, if we have an up day, we could turn back and look even more positive. And our bullish percent index, it's above 50. And it had been showing some signs of improvement, but then it ticked back down on Wednesday. Our Swenlin trading oscillator, it's positive, but now pulling back slightly. The money flow, the ultimate oscillator, and the vortex, those are all positive, and some of them are showing some improvement, but the vortex is still declining even with an up day. The copy curve is positive, and for some reason, the Pring bottom fisher has generated a signal. The financial sector seeing a little bit of weakness, but still looking positive. We're keeping an eye on the momentum for the NASDAQ 100. We're right on the moving average with the PPO. And the bullish percent index, it's still above 50 and turned positive recently, but now declined. So our conclusion, we're still positive for right now, but these negative divergences are still there. We're wondering if there's some kind of rotation going on, and the strength that we did see starting to build, now that's dissipating. In the short term, we are positive, but continue to be just slightly overbought. Intermediate term is where we're seeing most of the negative divergences, possibly looking at some rotation. And this is where a lot of the strength is really starting to go away. You could put a little bit of that into the short term as well. And in the long term, we're above the 200-day simple moving average. So we are positive based on price, but we are still seeing negative divergences longer term there. And we're no longer looking extreme positive with those moving averages. Thank you. I really hope you found this helpful. I hope you have a wonderful day, and I will talk to you in the next video.